Good morning, this is Larry Edelson with my Uncommon Wisdom weekly video market update for Thursday, August 4th. Lots of exciting action. As expected, we did see Congress raise the debt ceiling at the 11th hour, and that's creating quite a bit of volatility in the markets this week. A lot of investors don't know what to make of the action. Most analysts, most investors, it seems like everybody but those in Congress do realize, however, that raising the debt ceiling was merely a lot of political grandstanding and in reality nothing more than kicking our debt problems down the road, kicking the can down the road. And that is why we are seeing gold continue higher this week to new record highs. So I'm going to go right to the gold chart right now. Last week I showed you my projection for a rally, continued rally in gold up to this dashed line here around the 1675 level. We are at that level now as I record this video. We could see gold meet some resistance in that area. On the other hand, gold could accelerate higher into the 1750 area quite easily. Now, importantly, I am not speculating here for any of my subscribers or for myself on the short-term moves in gold. I am merely trying to inform you what's happening on the short term here. I am fully invested in gold up to my maximum recommendation, which is 25% of one's total investable funds into gold. So we are doing quite well here indeed in gold. And many of those positions were taken at much lower levels, as far back as 2001 at around $255 an ounce. Then again at $400, $500, $700, and $1,100, $1,165 to be precise, my most latest buy recommendation. I do not recommend adding gold at this point. I do expect a blow off top of some sort to occur and then a move to the downside. So I do not recommend adding gold to this position at this time. Even if you have no gold holdings, I do not recommend buying gold right here. So please stay tuned to my updates on gold as this rally continues to unfold. And remember, this is not yet the big move in gold. Not by a long shot. The big move in gold will occur once we get a new high in real terms, that is in terms of all currencies, above its inflation adjusted high at around the 2300 level. Then we will see gold move to 5,000 and to my longer term target of as high as $7,700 an ounce, but that's a few years away. At first we're going to see a solid pullback. I wish I could tell you exactly when it's going to occur, but that will be the time to load up for the next big move up to gold, up in to above 2300 to 5,000, 7,700. That is not going to happen yet. Okay, so let me be perfectly clear about that. Let's now go to silver. Silver is testing this red dash line I showed you last week. It's around the 42 and a quarter level. I expect silver to top out around that level and head back down. I still recommend very strongly that you stay away from the silver market until I give you the green light. It is a very dangerous market indeed. I would not be surprised to see silver move up to 42 and a half, maybe a false breakout to around 43, perhaps even $44 an ounce, and then collapse again down to the $30 and $28 levels. So it's just a market. It's the devil's market. That's what silver traders know about the silver market. It is a violent market that can rob you in a heartbeat. So I recommend staying away from silver in the short term. I do recommend long-term holdings in silver, but not at this level and not until I give the all clear. Now let's take a look at the dollar. The dollar, as I indicated last week, is largely going sideways to lower basis the dollar index. However, we are seeing record lows in the dollar against the Swiss franc, which has gone parabolically higher, and record lows against the Japanese yen, and near record lows against the Australian dollar and the Canadian dollar. The action that's occurring in the dollar is a seesaw action against the euro. The two regions of the world, the European Union and the United States, are mired down in a sovereign debt crisis that is going to last 4 years, and it's going to clobber the purchasing power of both currencies. So my best advice there is your long-term core holdings in gold and diversifying into Asian currencies and Asian economies and the Swiss franc, and of course the Canadian and Aussie dollars, the natural resource based currencies. Now I want to go to the Dow Industrials. The Dow Industrials, we're seeing quite interesting action. As I've been warning you, a large pullback has now started. We're down near early initial support at the 11.6 area. We'll be approaching that very soon. I do expect that level will hold temporarily. However, if it gives way at any time, we could still see the 9,000 level in the Dow that I've been warning you about. That's about how low the Dow could go, and I would not expect it to go much lower than that. That would represent a wonderful buying opportunity, because as the Fed comes in later this year, early next year, to start monetizing the debt again, we are going to see the Dow inflate higher, much like we're seeing in many commodities and especially in gold. But that time is not here yet. So please stay tuned to me and my work on the Dow. You do not want to be heavily invested in the broad stock markets in the United States or Europe at this time. Asia is where the opportunities are there in stocks and in natural resources. Having said that, stay tuned to these markets. A lot of action unfolding, especially for the summer period, and that forebodes a lot of action coming up this fall as we head into the autumn and into the end of the year. So the second half of this year, starting just about now and heading into year end, is going to make or break you this year, and I expect to be very active with lots of recommendations. Stay tuned and have a good weekend. This is Larry.